Good morning and welcome to the NWR Investor Conference. My name is Elliot Hasty. I'm a presenter here at AusBiz. Very excited to join you for the Investor Conference today. Before I introduce you to our next guest, who is Gary Foster from Pearl Global, let me sort of tell you a little bit about the company to give you some background. Now, Pearl Global is a revolutionary tyre processing company. It applies its next generation technology to cleanly convert tyres into valuable secondary products, including in the waste to energy opportunities, which is, as we all know, increasingly important. Now, Pearl's technology is a significant advancement on other methods of processing waste tyres, mostly because it's low emissions, it doesn't produce any hazardous byproducts, and requires no chemical intervention. It does hold Australia's first environmental approval for the thermal treatment of rubber, and is in commercial production at its facility in southeast Queensland. But I won't tell you anymore. I'll leave that all in the hands of Gary Foster, the co-founder and executive chairman. Don't forget, you can ask questions at any time. You can go to the Q&A button down the bottom of your screen and ask questions of Gary. But take it away, Gary.
Thanks very much, man. Thanks for organising, and thanks everyone for your time. Just give you a little bit of background, obviously, and thanks for the introduction. So Pearl has been operating at our Stapleton facility here in Queensland for over 2 years. So we have built up quite a considerable amount of data, I suppose, on our emissions and our outputs. And we're in a process of continually improving on all aspects of our business. As mentioned, we are the first company to be licensed to thermally treat tyres, and the only entity that we know of is that's commercially operating. What's encouraging over the last sort of 3 to 4 months is that we have found domestic markets for our products, and the products that we're producing are a tyre-derived fuel oil, so it's a liquid product, the recovered carbon black, steel, and clean gases. And as touched in the opening, those clean gases is something that we're working on currently to convert those gases through a turbine system to create our own energy. So quite an exciting development. That's been supported with the Queensland Government, who provided us a grant for that process. So I suppose we're a company that's evolving from confirming our technology works, and that's taken obviously a number of years of independent testing to get to where we are. Now we're converting ourselves into a full commercial operation. We're still growing the site here at Stapleton, which at the moment we're probably about halfway through, but we certainly have in the next 6 to 9 months more machines coming on. We've moved into another process which is related to tyres, which is crumbing. Now that crumbing is separate to our thermal desorption process. But again, the reason why we've gone into the rubber crumbing is that it's come out of demand from our asphalt customers who use around about 80,000 tonnes nationally for use within bitumen itself. So we're well supported by strategic investor Rock Partners, who hold around about 22.5% interest in the company. Every time that we've looked to expand, as young companies do, need to raise a certain amount of funds, Rock Partners have continued to invest alongside. We also have Energy Super Fund, which is a Queensland-based fund, who are a supporter as well. So just in this slide here, probably what we're reflecting is just quarterly production growth. So we've processed over 1 million tyres at this site currently. We intend to have a fairly strong increase over the next 6 to 9 months. We do have an internal target, if you like, of reaching cash flow positive this year. So what we're doing at the moment is we're tying up, I suppose, and we announced 3 or 4 days ago that we have a 5-year agreement with Oztech, or Aussie Asphalt Production, for the supply of our fuels. So what the asphalt industry is looking to do, and there's a lot of eyes on us currently, and the success of this particular program with the asphalt industry is they're using the fuel as an alternative to diesel. So this is used in their burners, and basically the burners are heating the asphalt, where our recovered carbon black is going into the asphalt mix itself and creating a better asphalt. We've had some serious success in this area. We've recently had some media releases in relation to Moreton Bay, who have laid roads using this asphalt, who have very strong positive outcomes. In fact, there's 10 benefits that our carbon is able to increase the characteristics of the asphalt. So there's been some very strong results. Next slide. I won't go into this too much. We obviously know there's a fairly large issue with tyres. We're very happy to be in this space as one of the cleaner conversion of our tyres into alternative products, but also finding domestic markets for that. What's important to us also is obviously the social outcomes. So, we are reducing stockpiling. There is independent experts reports that we have had in relation to our process, having a carbon reduction of around about 500 kilos of CO2 for every tonne of tyres recycled. But also, we think that the story itself is quite strong, both from an economic perspective and a social and community perspective. So the business model itself is we receive income from tyre collection. So people drop off, if we pick up from Bob Jane T-Marts, or we deal with the mines up in the Bowen Basin, we take away mining tyres, we get paid a fee for removing those tyres or receiving those tyres at our depot. We then shred those tyres into smaller, about the size of your iPhone, and we put them through our thermal desorption units. And what happens in that thermal desorption unit is there is a breakdown. So the fuel that's made up of the tyre comes off as a gas, and we capture that gas and we cool the gas. And when we cool the gas, we create our fuel. What's left over at the back end of the unit, if you like, what comes out is carbon and steel together. And we basically just have a normal separation system, and we separate the carbon from the steel. So we have our three products. And obviously the fourth product is the gas, which I spoke about before, which we're looking to convert into our own energy source. It means that we're not relying on the electricity grid. So what we're doing at the moment in our business is all the level 1 products that you see there today. The level 2 products have all been developed. We've had a strong relationship over the last 3 years with the University of Western Australia, who's assisted us in developing our products, our secondary products. So as an example, our raw fuels, we've been able to separate that through a distillation unit, if you like, not a very, very small refinery, and we've been able to fraction off what we need out of it. So 30% of our fuel, because of the way that we process, is actually solvents. We've taken those solvents and we've created a degreaser, and we've put that degreaser into the market from a test perspective. So all the secondary products you see on this page is all future business. The reason why we're doing those secondary products is because we get a significant uplift in value for each of those products. So as an example, if we sell our fuel today at 60 cents a litre, if we were to refine, make a degreaser, we could be talking $2 per litre. So there's quite a significant upside on those level 2 products. Again, just on our process, pretty simple in that we collect our raw material, we receive an income for that, we process the tyres, and then obviously we sell the commodities, the fuel, the carbon, and the steel. So just in relation to our process, you'll see here our operations in Stapleton. The units are quite small. They sit in a 40-foot container. They are portable, so you could do campaigns with them, although we don't really need to do that. We've got a massive amount of tyres currently where we are, and if we were to expand into another area, we would actually secure the feedstock for the processing prior to committing to that particular site. So we do have a number of opportunities that have been presented to us, and it's also through the Queensland government, where they would like us to sort of move up the coast, sort of Bowen Basin area, Townsville, where there is quite obviously a lot of industrial area and an issue with tyres. Touched on before, our partners. So Rock, obviously very supportive. Capricorn are an interesting strategic investor. So Capricorn have 18,000 automotive members, quite a large cooperative. The reason why they're invested in us and quite interested in us is obviously for what I spoke about before in relation to the solvents being converted to degreasers, and then being able to distribute out those degreasers to the 18,000 members as a recycled product, if you like. So it serves a number of benefits. The other partnership we have is with Aussie Road Services. We do have a 5-year offtake agreement. We're continuing to work and develop our products with Aussie Road Services, so it's a very close relationship. As I mentioned, we are getting a lot of interest, and we do have a pretty strong sales pipeline in relation to the larger entities. So, we have engaged with Downer EDI, Boral, Fulton Hogan, a number of those entities. Hanson's is another one, because they've sort of been the larger groups, as we know in business, are usually not frontier type groups. They sort of sit back, wait, see if it works, and then sort of move forward from there. So the fact that we're now getting interest from those particular entities is a strong sign that what we're doing is having quite an impact in that particular sector. I mentioned before, obviously, about our ongoing investment into product development. So we've created the fuel oils into solvents, electrical energy I spoke about, and obviously upgrading our carbon. And all of these will be done, at the right time of our business cycle. As mentioned, had a great success in the asphalt and bitumen. One of the agreements that we do have in place that will be obviously updating the market on, although it already has been announced, is in relation to our crumb rubber. As I mentioned, crumb rubber is a very simple process. Tyres come in, and it's basically a cheese grater over the top of the tyre, and you get shredded rubber. And there's a number of applications for that. One of those applications is in bitumen itself, and there is a difference between asphalt and bitumen. Very briefly, bitumen is the wet, soggy glue, if you like, that holds the asphalt blend together, or the recipe together. So asphalt dry, bitumen wet, and those two come together. So we do have an agreement with a group called Bituminous Products for 1,500 tonnes. So that to us is quite a lucrative opportunity and another stream of income, but within our sector in doing what we do. I mentioned that we recently laid the Xero product. The Xero product is basically the way that Aussie Road Services are marketing our fuel and carbon. And really interestingly, it's got great traction. We are using 10 tyres per tonne of asphalt that's produced by utilising the product. So what we're starting to do, especially from a campaign perspective into the retail and industrial sector, is market ourselves in that we're taking Queensland's tyres and we're putting them back into Queensland roads. And again, we're getting great traction in relation to the results. I won't go through the credential board, it's all there for you to see, but in essence, we have pretty strong directors on the board. Brian Mummy, who's come from obviously BP Australia, is involved in the Northwest Shelf Gas joint venture. Brad Mitten, obviously sitting on the board of Rock, as well as our group. I'll flick through that. This is the progress timeline, obviously just a simple schematic of how we've continued to evolve our business. 2021, we're looking at, obviously said, increasing our volume, bringing on more thermal absorption units, and the crumbing opportunity, as well as increasing the breadth of our sales. So we're now talking to explosive groups for the use of our recovered carbon black and explosives. We're talking to the steel industry. So there's a number of opportunities for us to expand outside the asphalt sector, even though asphalt's a large sector in itself. Investment highlights. Obviously, we're in a very large addressable market. We have established a track record of our process. Interestingly, the government, the federal government, recently came out and talked about the banning of waste streams outside of Australia. One of those is tyres. So the government policy, both in Queensland and at the national level, is certainly supporting our business, which is encouraging. And that's it. So if there's any questions, I'd be happy to take them.
Wonderful. Thank you so much, Gary, for sharing those with us. So tell us, what's the scope for geographic expansion when we're looking beyond Queensland? Do you see yourself servicing all of Australia and I guess moving beyond our borders and going overseas?
Yeah, so I suppose the first step is, and the way that we're progressing our business is we've specifically targeted from a product perspective a domestic market, which is the asphalt industry. And then from the asphalt industry, we break that down into who are the smaller players. The reason being is that when you're testing new products in a commercial sense, you're not going to get the larger borrows, downers, etc. So now that we've had success at that particular level with one smaller asphalt plant and we've got the results, where we're now focusing our marketing attention is to the national companies. So your downers, who's represented in every state, and you've got your borrows represented in every state, Fulton Hogan represented in every state and in New Zealand. Stanley Asphalt is actually very large in Europe. So the plan is really to have a national footprint aligned with a larger entity. So we have offtake agreements. We actually have a bankable site before we actually commit. From there, we have already had interest from a number of the waste management groups out of Europe, the larger ones. So we're talking Suez. Remondis has been through our facility. The Germans have been through our facility because they have the same issue there on that side. We will certainly look at the international opportunities once we've sort of been able to bed down a national agreement. I think we need to ensure the easiest for us is we're in our own backyard at the moment, and then moving overseas is you need to really partner with the right group because you don't want to move into a foreign jurisdiction without a strong JV partner.
Absolutely. So in terms of that, when should we be able to see the higher value products meaningfully contribute to the revenue of the group? And would they act as a means of entering new verticals beyond just asphalt?
Yeah, absolutely. So the reason why we started, I suppose, in the asphalt was because, one, it's a very large industry. They move a lot of volume. There's 10 million tonnes of asphalt produced in Australia every single year. There's 800,000 tonne of bitumen produced. So the reason why we started there was obviously a big market that we can sell into as we expand. Our primary focus is obviously cash flow positive here at Stapleton as our first target, and then we by moving the products that we have, which is the level 1 products. The level 2 products are already completed. Everything's been done on that page. It's done. So we know that they're sort of sitting in abeyance, ready to go. What we need to ensure is that we do it in a manner that allows us to ensure the best outcome from the company perspective. So if I take the solvents and the degreaser scenario, we need certain volume to ensure the economics of that. So we need to double the size of our production here at Stapleton, which we have the capacity to do. We don't need another site to do that. And then it becomes viable for the likes of the solvents and the degreasers because you have more volume. So that's a certain strategy that we have.
Thank you. Now, does the process that you guys go through allow you to get carbon credits? And I guess whilst we're on that sort of carbon side, do you capture carbon?
Yeah, so the first answer is we have already done an independent report through RPS, whom have done base level, if you like, and said what you have here, yes, does have the potential for carbon credits. The next phase is you need to go through a fairly extensive process, which we will be starting probably in the next few months, to be able to register for those carbon credits. So we've got the approval as far as we've got an assessment to saying, yes, it is, but now we need to actually go and get the license, if you like, for that to happen.
Well, Gary, thank you so much for taking us through Pearl Global, everything you guys are doing, and of course your plans for the future. We really appreciate it.
No worries. Thanks very much for your time. Thanks all.